Okay, everyone, I'm going to go ahead and get started. It's about 2 o'clock, June 25th, 2020. It's Real Property Management Gold's webinar here. I'm Ryan. I'm the owner of Real Property Management Gold. Most of you guys I've met or interacted with prior. We also have, as another panelist, is Mary Slade from Bookkeeping by Blanche. She's my CPA. She's going to go ahead and give a little presentation on what we need to know about COVID losses and things like that, tax planning, some basic things as we get through this crisis here. So I've got about 20 minutes of presentation for myself, a lot of information on the CARES Act, evictions in Maryland and things like that. And Mary will have the last 10 minutes or so. And we should have some time for questions and answers. If you have a question, feel free to type it into the question box and we'll address them at the end of the presentation. And we're hoping to get through our part of the presentation in about 30 minutes or so. And then have about, have as much time as we need for questions, hopefully, 10, 15 minutes worth of questions for you guys. So if you have questions, feel free to type them into the chat box and we'll go ahead and address them as we go through the presentation. So just want to go ahead and start off by saying that I am not an attorney. I'm not offering legal advice. For legal advice, please consult an attorney. We're not legally advising anybody on this webinar. So if you need legal advice, make sure you consult an attorney. I'm not an attorney. So, okay. So, we talked about this last month. This federal CARES Act really had a lot of impact on rental properties throughout the country and Southern Maryland. It was a $2 trillion package. It made changes to what we could charge for late fees, notices to vacate, evictions, all those different kinds of things in regard to federally subsidized loans such as USDA, Fannie Mae, Freddie Mac, FHA, which is the majority of loans. It also allowed on those loans, homeowners are having a hard time making their payments due to COVID-19 to go ahead and put them on forbearance. This legislation expires on July 25th, and there's a lot of information you need to know about what's going to happen and how to handle that going forward with rental property after the 25th. So, first of all, on July 25th, you can go ahead and start giving notices to vacate. Again, you have to give at least a 30-day notice. So the earliest someone could technically be out of a house that you have that's affected by the CARES Act is August 27th. So about a 30-day notice. The 25th happens to be, I believe it's a Saturday. So the 27th is a Monday. So you can give a 30-day notice to have someone out by August 27th. This is important because a lot of people who owned homes wanted to move back in and could not, because you cannot give a notice to vacate for any reason if it was one of those loans affected by the CARES Act. That expires on the 25th of July, and you can give that 30-day notice. If you're going to give a 30-day notice, make sure you do it in writing. Make sure you have it sent certified mail. Make sure you tape it to the door. You take a picture of it taped to the door so that if it gets to the point where they still refuse to leave, you can file eviction. You have to provide the proof in the notice that you provided that 30-day notice. So make sure you do that. If you have to provide a 30-day notice to someone you want to get out of a property that's impacted by the CARES Act, because you can go ahead and do that again through July. Late fees, again, can begin being charged again on July 25th. Maryland state law is 5% of the max of the rent due. So if someone hasn't paid in 3 months, you can charge a 5% late fee on top of that if you want to, starting on July 25th. We're not going to start charging again until August 6th, which is the next round of when we would do so on those late fees. We do have many tenants on payment plans and things like that with COVID who got approved. They went through a process. We had everyone go through a screening process to get on a payment plan if they're behind because of it. And a lot of those will be waived and things like that as part of the payment plan as long as they're fulfilling their obligations. But you can go ahead and start charging late fees again once this legislation expires if you have one of those loans. Just once again, if any of these properties that you have are not on a loan, you own it outright, the CARES Act doesn't apply to you at all, so you could always have been charging. But you can back charge those late fees 5% if you want to as of July 25th. There is a change to the eviction process in Maryland. This is very important. You're going to hear me referring to this form a couple times throughout the presentation. There is a new form you have to file along with the standard eviction form in Maryland if you're going to file an eviction, and that is the CARES Act Declaration of Compliance form. It needs to be submitted on all evictions that have been filed since March 27th. There are evictions that have been filed but have not been able to move through the process because the courts have been closed in Maryland. They are reopening. I'll get into that in a minute. But anything Anything after that that you filed already, you need to go back and submit that form to the court, or they will throw your case out. So just get your case number, go back to the court, fill out that form and file it with the clerk. It pretty much, the point of this form is to make sure that the house isn't impacted by the CARES Act, or if it is, that you're within compliance to be able to move forward with an eviction. The CARES Act also expires on the 25th, and the Maryland and the CARES Act laws in regards to eviction all expire on the 25th. However, Maryland's moving into a stage reopening. I'll go into that in a minute. But the main thing they want to know on this form, if you look at it, is they want to make sure that you're not getting forbearance on your federally subsidized loan and then still trying to evict the tenant. So for example, if your payments are being held because you're not making your payments and you're getting forbearance in one of these loans and you're not making payments, they don't want you to evict the tenant. So you can't evict the tenant and not be paying your mortgage. So you have to show proof that you have closed out, that you're no longer getting that forbearance, and submit that to the court before they will process your eviction. All other things should be expired as of the 25th and that, but that's the main thing they're looking for, is to make sure you're not getting forbearance when if you're trying to evict the tenant. Maryland court reopening. So they started reopening a little bit back on the 5th of June. They started off where you could move forward with the emergency breach of lease actions, which involved injury to people or the property in some kind of emergency action. So this would mean that if, for example, you're in a multifamily unit and there's someone damaging a unit that's causing harm to somebody else in it, then that would qualify. If someone is doing something massively illegal that could harm other individuals in the property, or they're purposely destroying the property in a really bad way that can make it unsafe, you can right now still move forward with the eviction process through the courts. July 20th is the second phase, where they're going to go ahead and allow rent escrow actions, tenant holding over actions, and any other breach of lease actions. So this means that rent escrow is if a tenant files a case against you for not doing repairs. They can once again do that. Tenant holding over is if someone was supposed to be out before COVID, or they were supposed to be out, you want them out, and it was before the CARES Act, or it's not in compliance with the CARES Act. They'll start hearing those cases again and moving those forward. And any other breach of lease, so find them breaching the lease and you want them out because they breached the lease and they refuse to correct the action, those cases will go ahead and start moving forward on July 20th. July 25th is an important day. The courts and sheriffs will begin processing warrants of restitutions on any judgments for non-payment of rent received prior to the closings in March. So that means that anybody who wasn't paying before COVID, the cases are going to start moving forward again. You must file the CARES Act declaration form I mentioned by July 27th on these properties to go ahead and make sure that it continues to move forward. If you do not go and proactively submit this CARES Act declaration form, then your case gets thrown out and it has to start over again. So, July 25th is if you had people prior to COVID who weren't paying, those, and that you got a judgment against them and filed a warrant of restitution, that will go ahead and start moving. The most important date that everyone's waiting for is August 31st is when the courts pretty much start going back to normal. So any case that you filed for non-payment of rent of any of these actions, that are not in the earlier stages, which is mostly non-payment of rent, what will happen is that if you were to file an eviction today, you'll get a court date probably sometime in September, depending on the court you're in and how much availability you have. I think they're filling up the cases and then just moving on to the next week. In regard to that. So August 30th, if you file a case, the cases you'll get a court date sometime between August 31 and October 4th, and you'll be able to move forward with that eviction process. I expect it to be backed up. It's probably going to take several months, but that's the last thing to reopen to get fully going again. As you can file, is those non-payment of rent cases will move forward. So if you have someone who's not paying and you have to go to court, you get a court date in September, you have to wait, you get the judgment, they didn't pay, you win, you file the warrant of restitution, 4 days later, and then you go to the sheriff, and it usually takes a couple weeks. They may be more backed up. So I'm expecting it to take about, if you file a case and, for now, if someone not paying and they go all the way through and don't make payments or get caught up, they'll probably be in your property until at least October. So keep that in mind as you move forward. Best practices and procedures for handling delinquencies during the pandemic right now. Do not make blanket statements about any of this. Handle everything on a case-by-case basis. Everyone's situation is different. Hear them out. Empathize. and try to work out a plan. Communicate with the tenants, informing them that they have a balance due. Courts will be opening, late fees will begin being charged again if they're not upholding their part of the lease agreement or the payment plan. Reach out to these tenants in delinquent, ask them to verify their financial situation, have each tenant fill out a form detailing the situation and signing it. So we've been doing this, asking people, a lot of people we're finding are going back to work and they're going to be able to start paying. So what we're doing is we're using this information that we're getting from them to get them onto a payment plan, where a lot of times we're extending out the lease and then adding the delinquent money to each month, so it's paid out over time, in order to help these people get caught up over time, and working with them based upon that information that they submit to us in an application, something that works for everybody. So that's what we're working on. If they're unable to agree or financially unable to work out a payment plan, attempt to negotiate voluntarily vacating a property. So if you got someone who's $10,000 behind and there's no way they're going to be able to get caught up, the best thing to do is, so you don't have to wait till October, is try to negotiate something with them to get them to turn in the keys and leave the property voluntarily without having to go through the eviction process. It does make a lot of sense for them not to go through it because they won't have the eviction on their record, which will make it easier for them to rent another place in the future. You can waive some of the balance if it's going to collections. You can, set it. You can set a date. There's all kinds of different things you can negotiate. Negotiate about anything. If they're not paying, you want to get them out as quickly as possible, and it'd be easier to negotiate them leaving voluntarily and making some concessions in a lot of situations, rather than waiting until October to get them out, where they're continuing to live there for free. They do have, a benefit to not have that on their record, to not go through that process. It's not a fun process for anybody. So, a lot of times you can work something out in regard to that. If the tenant doesn't cooperate or doesn't respond and they owe a balance, then the only thing really to do is, file an immediate eviction as quickly as possible. The sooner you file it, the sooner you're going to get through, and charge the maximum late fees if they're not cooperating. That last case scenario, but if they're not going to do that, they're not going to work with you, they can't pay, you got to get them out of the property, unfortunately. You can't live there for free forever. So that's the last step that we'd have to do. It'll take a couple months. It'll be painful, but there are going to be some of these circumstances where that's going to have to happen. Current trends in rent collection and non-payments on our end, just to give you guys an idea of what's going on. Unfortunately, I've mentioned this before, a lot of our tenants in Southern Maryland are military, government employees, state employees. They're not really as impacted by COVID-19 as some other areas that are, heavily, tourist impacted, such as Florida or Nevada or, Vegas, places like that. So we're in pretty good shape here in Southern Maryland. Just RPM Gold. April, we're collecting 94% of our rents have been paid in full. So we do have a few stragglers. About 3 to 5% of our units are impacted by COVID. Nationally, it's about 69% are impacted, and it's a lot of the low income ones are the most impacted. Unfortunately, low income people are the ones who are most impacted by this pandemic. So in national average is 69%. We're at 94% collection, so we're not having too hard of a problem here in Southern Maryland. Other considerations, do empathize, don't sympathize. Empathize, try to work it out, but don't sympathize and just say, oh, it's okay not to pay ever again or anything like that. You probably won't work out too good for you. So empathize, try to work it out, try to be fair, try to think outside the box. No one wants to get put out of their house. You don't want to have to do that. We don't want to have to do that. It's not fun for anybody. But empathize, feel for their situation, but don't just give in to everything. Just make sure that you're smart about what you do. Most of the tenants who were not paying before COVID are the ones who are not cooperating right now with the collection process. So the main problems we have are the people who were having problems with before this even happened. And a lot of those are going to start moving forward on July 25th. We're going to have to move them forward on that. It's not recommended you forgive the rent in any circumstances. I mean, even if you don't expect to get it and you want them out of the property, it's good that you can use that as leverage to try to get them to vacate. If you forgive and then all of a sudden we end up in another lockdown situation, then it's just going to start all over again. So be careful with that. Just be smart with what you're negotiating, and then just make sure if you say you're going to do something in regard to the tenant not paying, make sure you follow through on the action steps. It's hard to get respect of somebody if you don't follow through. So keep that in mind. So just Southern Maryland housing market rental housing market update. Lease renewals are still up 75% from the pandemic. Most of our tenants who are living in our properties over the summer have been renewing their leases and not moving, which is good. Our occupancy rate has gone up substantially. Since February, we've gone from 88% to 97%. We've rented 52 of our 59 homes listed since March 15th, when the pandemic began. As I said, occupancy rate has gone up since the pandemic. The days on market has gone down from 26 days to 8 days. And our average rented credit score has gone up 80 points. Right now, the rental inventory is extremely low. We think a lot of people are dropping out of the sales market to rent because of the uncertain times right now. And we are renting houses faster than we've ever rented houses before. So, we're really moving, and we're expecting to see a lot of spikes and moves in July 2020. A lot of military moves were delayed until July that were supposed to happen in the spring. And we're looking forward to, we're probably going to take on a lot more properties and get a lot more renters in. So everything is renting. The credit score has gone up, and not one person that we've rented a house to after the pandemic has begun that have moved in fresh that we haven't dealt with before has been delinquent, because we're still running the same tenant screening, still following the same process. And we put people in houses who we knew had secure jobs and secure income and higher credit scores, which is really helping, making things a lot easier so we don't have to end up in these situations that we're talking about here. So I'm going to go ahead and turn this over to Mary Slade. She's my CPA. She has done my taxes for many years, and she has some insight on the things that you guys could use to help you going forward with this process. So Mary, go ahead. Thanks.
Great. Thank you, Ryan. Can you hear me okay? It's all going good?
I believe so. I can hear you.
Okay, well, good. You're the important one. My name is Mary Slade. I own Bookkeeping by Blanche. I do taxes, bookkeeping, and financial advice. I've been in the business for over 15 years. I'm married to a local attorney, and between him and I, we own rental property, both residential and commercial. So this is something that not only do I help my clients with, but I do on a personal basis. When the COVID came out, everybody kept talking, oh, don't worry about don't pay your rent. The landlords aren't going to ask for rent. We're going to help out all the people that are renting properties. And then you wonder, well, how's that going to affect the landlords, the people that own the properties on the other end? And the programs that came out, there's really only one program that is going to help the rental property owners, which is the EIDL, the Economic Impact Disaster Loan, which is something that I do recommend looking into. You can qualify for it. Most people I've seen have gotten up to $150,000. It's got a 3.75% interest rate, and it's a 30-year loan. Now, that being said, there are a lot of restrictions on the EIDL, so it would really be something that you'd have to weigh to decide if that was a good value for you. Another thing that I've looked at, talking to a lot of my clients about is, getting a line of credit or refinance from the bank. Interest rates are low, and this may be a good time to refinance. Property values have been going up this summer, so I've seen a lot of houses that are coming in. The appraisals may be higher too, so it may be a good time to get a reappraisal to kind of help you through this pandemic. Do you qualify for a PPP or any other benefits, especially if you're an LLC? So an LLC is a legal status. It does not set up how you file your taxes with the IRS. It sets up the liability protection for each of the rental properties, which you may or may not feel that you need. That's a legal question, and I'm going to pull a Ryan Bertucci. I am not an attorney either, even though I am married to one. But he reminds me all the time that I'm not an attorney. But I do tell my clients, the more separate you make your business or your rental properties, the more protection you have with the liability and the tax audit. So that may be something that you want to do with your rental properties, is have them in separate LLCs. However, just because you're an LLC does not mean you're a corporation that qualifies for the PPP or any of the other grants that are out there right now. With the Tax Cuts and Jobs Act that came out in December of 2017, it specified that small businesses may qualify for the QBI deduction, which is the Qualified Business Income Deduction. A QBI deduction is a 20% decrease on taxable income produced from that business. An example of this is if you made $100,000 in a business, you'd only pay taxes on $80,000. So it's a really nice benefit out there that a lot of my landlords do qualify for. There are also caveats, though, that come with this QBI deduction. So it's really something that you need to work with a tax attorney or a tax accountant as to how many people would qualify or how you would qualify for the QBI. Because sometimes you have to have W-2 employees, sometimes you have to have a lot of assets, sometimes you may just make too much money and you may not qualify. So even though it's a really nice tax benefit out there, it's not something that everybody's automatically going to get. When the Tax Cuts and Jobs Act came out, it was very vague as if to rental properties qualified. When the rules were first written, they were very specific. If you owned a business and your rental property was affiliated with your business, then you would definitely qualify to get the QBI deduction on rental property income. So for an example, I own my own tax practice, my own firm, but I also own the building that my firm runs out of. And so because that's a rental property and because it's attached to my business, I get a QBI deduction on both. So if I make $100,000 in rent, which I don't, on my building, then I would only pay taxes on 80% of that, or $80,000. Through 2018, though, the IRS really began to clarify the regulations when it comes to the QBI. And they stated that a rental property did qualify as long as the owner spent 250 hours per year on the management of those rental properties. So when you're looking at if I've got somebody that just has one rental property, they probably don't spend more than 250 hours a year on it. And so they really would not qualify for the QBI deduction. But if I had somebody that had multiple rental properties or managed many rental properties, then they would qualify for the QBI. And that's something that's important when you're looking at how the income is coming in from these rental properties. The one thing that I've worked with a lot of my clients on over the past year is to form a management company to manage the operations of their rental properties. So if I have somebody that has, say, 4 rentals or a multi-unit building, instead of just operating that as a rental property, they're going to run it as a rental property and then pay themselves a management fee to manage the rental property. Now, the management fee that they're receiving is Schedule C income, which is now active income, and would make the rental property and the income for the Schedule C all qualify for the QBI deduction. Okay. There's some good things and bad things about doing this. When you're a Schedule C, you have to pay self-employment tax, Social Security and Medicare. So there is an additional tax that goes on it. So it is something that we have to weigh back and forth. However, with the Schedule C, you can also take other deductions that you normally wouldn't be able to take on a rental property. So say mileage to drive to visit new rental properties, cell phone, your office, business use of home. I have people that, buy lawnmowers that they're using for their personal residence, but maybe they go around and they mow, all their rental properties. That would be a business deduction that I couldn't necessarily take on a Schedule E because it's not owned by the rental house, but I could take it on the Schedule C. The other nice thing about being a Schedule C and having that management company is that now you can actually put some of that money into an IRA, so you can defer some of that income. And so rental property is passive income by its nature, but a Schedule C or a management company, if you're doing that, that's active income. And so now you can go ahead and start contributing to an IRA. So there's some good ways to hide money from the IRS legally, doing it that way. Let's see. The other nice thing about having the Schedule C or having the management company is that now you would qualify for the PPP, the Payroll Protection Plan, which came out with this pandemic. And that was something that a lot of my small businesses did get. And as long as you can use it for expenses over the course of, it started out as 8 weeks, now it's extended longer, that would actually be a grant. It would be forgiven. It should be a forgivable loan from the SBA, from the Small Business Association. There are other grants that are out there that you could qualify for if you had been a Schedule C, or if that was something that you wanted to do, if you wanted to form this management company. You may also qualify for unemployment, because now technically you're not employed because you're not getting the money from the rental property. So there may be some things we could do on the management side of the Schedule C, and you're still hiring a property manager to actually do the property management for you. And that can still be a straight expense. This is more the running and the managing of the properties that you may be doing that they're not doing for you. So there's some really good benefits of doing that way, both tax-wise and liability-wise too. There's some things that you can do. The one thing I do have to say with all of this is that Congress goes through and passes these tax laws, and they've been moving so quickly that these laws end up coming out very vague. I keep telling my clients to apply for everything. You qualify for unemployment? I don't know, but go ahead and give it a shot. If you think, if you want to, especially if you're having a need, especially if you're not getting the income from your rental properties, let's see what we can do to get you some of that money. I do tell everyone, I mean, we're going to be paying this back. We are all going to be paying back these stimulus packages that are coming out. Our tax rates are going to go up in the next couple of years. So take advantage of what you can now. I don't know where this is going to go. I don't know where we're going to be with coronavirus in the next, 3 to 4 months. And so, 4 months from now, you may not have the ability to qualify for some of these grants or programs because they may not be out there. So if you think you're going to need it, apply for it now. We'll deal with it once you get approved or once you figure it out. Okay, now it's going to go into record keep. Let's see, let me go into rental income. Rental income is by nature a passive investment. If you make more than $150,000 adjusted gross income, any losses generated by your rental property are not going to be deductible on your tax return. This may really affect people this year, as some of our rental properties may have bigger losses than we are used to. Okay, now don't worry, the losses will be suspended, so you will be able to use them in the future. You will not lose the losses. However, don't come into me. I have this happen every year. I have somebody comes in and they say, oh, my rental property's been empty all year. They did a lot of damage. I spent $50,000 fixing it up. I got a $50,000 loss on my taxes. No, I'm sorry. Your W-2 job pays you more than $150,000 over the course of the year. So that is going to be suspended. So you're not going to get the benefit. This would be another reason to perhaps set yourself up with a management company for yourself so that you can start to move some of that money over to Schedule C, because the Schedule C, the management company, is active income and active losses. And those losses do not have the limit of the $150,000. So they would qualify every year for those losses. So that may be something that you want to think about. Record keeping. Keep good records, okay? Again, I don't know how the IRS is going to be interpreting these laws that Congress keeps passing. Good records are really going to help out next year when we're doing your tax return. There are going to be tax changes that are going to come out of all of this pandemic. We've already seen that there's going to be credit for sick leave for self-employed people. The problem is that I don't know what kind of record keeping they're going to need or they're going to require to prove this. So having really good records is going to help.
And just real quick, I would say, as a management company, we keep all those records and give you the balance sheet and the income statements and the detailed expense reports that you would need to give to your CPA. If you're not using a management company, definitely get something like QuickBooks Online or something like that that could that you'll see the money coming in and out and you'll be able to track it properly. There's nothing worse than sending your CPA bad records. They yell at you. So don't do that. So easy software programs doesn't cost too much to do. We recommend you do that or hire a professional to do your bookkeeping for you.
Right. And right now with, when you're not collecting late fees, when you're, maybe not getting rent on time, you're not going to remember a year from now what happened back in April of 2020. And, when I sit there and say, hey, did you waive any penalties? Or what is this extra penalties that came in? Are you going to remember where those come? So Ryan's absolutely right. Having a good program is a great way to go. A lot of times I tell people, keep separate bank accounts for each of your rental properties if you can, because that keeps everything, in one place in your, you've got one set of paperwork from your bank statements, and that makes that a lot easier. We're not moving money around and I'm not trying to track down $5,000 that went in somewhere and I don't know where it came from. And then the last thing is planning. Meet with somebody in the off season. It's so much easier for us to make these changes and set everything up now than when it's tax season for both you and me. In tax season, of course, we're all going crazy. And so then I'm doing your taxes at midnight and we're trying to figure out the best way to handle all these, whatever happened in 2020. But the other thing is sometimes it's too late. I can't switch things around in April when I can switch them around now and have a good plan going into tax season. So that's what I have for you today. Any questions for me?
Yeah, if anyone has any questions for me or Mary on any of these things, go ahead and type it into the Q&A box or into the chat box, and we'll go ahead and answer them now. I know this is kind of a lot of information. There will be a recording of this that will be available shortly by tomorrow. We'll go ahead and upload it. But if anyone has any questions right now about anything, please go ahead and type it in the chat box. I'm going to go ahead and test this chat box now, make sure that it works. Hopefully you guys can see that. Oh, got a Q&A. She's asking, how much can I raise the rent? There's been nothing that's in Montgomery County. There was a law that said you can only raise the rent 2.75%, but that's only in Montgomery County. There's no other restrictions in the state of Maryland about how much you can raise your rent. Does that make sense, Eliza? So yeah, there's no restrictions on that. Usually the average is about 3%. But there is currently in Maryland, there is no restriction on on rent increases due to COVID-19, only in Montgomery County. Anybody else have any other questions? Okay. When will RPM Gold start conducting quarterly inspections again? We have been, we are getting them caught up right now. We did have an option for tenants to kind of do them on their own, but right now we're back in we're in stage 2 reopening. We were there about a week ago. In all 3 of the counties that we service. So we are now getting them caught up. We actually brought on an extra staff member in Waldorf. His name is Michael Reed. You'll probably be hearing from him shortly. But we are currently knocking out all those overdue inspections. Most of the tenants are cooperating. Some of them are not with COVID. We don't want to force anybody into a home with COVID if they have a thing. So we're allowing them to do it virtually, and we're going to verify that at the next time around. But you should be seeing those coming through. You should be seeing it coming through shortly. If you have a question on when your specific property is going to be done, feel free to email the office, and your office manager will get back to you and let you know when it's scheduled. Anybody else have any other questions? Says Mary, how does active income versus passive income affect Social Security withdrawals?
So both of them are going to affect your Social Security withdrawals because they're going to show up on the front page of your tax return, and both go into your AGI, which is your adjusted gross income. So both of them are going to be equally impactful, the active versus the passive. When you're paying into Social Security, the active is the one that's going to pay into it, where the passive is not. And that's why sometimes I've got people that just have rental properties that just have passive income that actually aren't paying into Social Security, and that may or may not be something that you want to do. And again, that doesn't allow us to put money into an IRA. So if we want to go a little further with that, if we wanted to think about if you were withdrawing money from Social Security and trying to figure out how to not make it as taxable, because Social Security withdrawals are taxable based on what the rest of your income is. So if you were trying to lower your income, that might be a good reason to start moving some of the rental property income over to active income and then putting that money into an IRA, which would effectively lower all your income on the front page of your tax return and maybe not make your Social Security as taxable.
All right. Any other questions? Those were good questions. Thank you, Eliza. Okay, so we're all wrapped up here. Thank you, Mary, for coming on. I hope this was helpful to some of you guys. I'll go ahead and this was recorded, so I'll go ahead and download the recording, and I'll have the recording out, uploaded, and everyone will get an email letting them know where the recording is if you guys want to go and watch it again. If you have another question about any of this, you can email us at support@realpmgold.com. And if it's from Mary, we'll forward it over to her and she can respond to you that way.
That'd be great.
Okay. All right. Thanks, Eliza, for answering questions. Thanks for everyone being on the call. Thank you, Mary. Everyone have a good day and have a good weekend. Thank you.
Thank you.